Hello and welcome to this week's episode of TA Technical Tuesday. My name is Trent Carroll. I'm the founder and chief market strategist here at TA Capital Research. If you're new here, TA Technical Tuesday is where we highlight the top 5 charts that we believe you should be watching right now. Before we dive in, though, there is a quick disclaimer for you to take a look at. All right, starting out, this is the S&P 500 breadth. So we're taking a look at holdings above the 20, 50, and 200-day moving averages. Short to intermediate term breadth continues to decline, with the S&P 500 currently trading around all-time highs. Holdings above the 20 and 50-day moving averages peaked back in May and July and are currently around the same May levels. Holdings above the 200-day moving average are declining as well, but still more than half of the S&P 500 holdings remain above their 200-day moving average. So currently, right now, we want to take a look, or we want to keep an eye on the current leaders. So that's going to be technology, communication services, and consumer discretionary. If those leaders begin to roll over, that could trigger some strong selling pressure within the S&P 500. Moving on, this is the S&P 500 versus long-term Treasury bonds relative chart. So equities are breaking lower out of the recent rising wedge versus long-term Treasury bonds. The last break of rising support within this relative chart occurred in February 2025, followed by roughly a 20% pullback into the year-to-date lows in March and April. While there are some caution signs short to intermediate term, our primary risk level within this chart is that pivot below, which was the previous breakout. Overall, we remain net risk on over that pivot level. Here is the financials select sector, that's ticker XLF, and this is that weekly time frame. Financials are breaking lower out of this rising wedge, and on the daily chart that aligns with price trending below the 20 and 50-day moving averages, with that 20-day moving average threatening to push below the 50-day moving average, which signals some additional bearish short to intermediate term price action. 51 is an important level short term that we're keeping an eye on, which aligns with some pivot support and the rising 200-day moving average. The important thing that we're currently monitoring within this chart is the potential for a lower low to be made within financials, which would initially signal a trend reversal. Moving on, this is the iShares Russell Midcap Value ETF. That's ticker IWS. This is that weekly time frame. So midcap equities continue to show weakness. Within our TA style and factor report, we highlighted that midcap equities are underperforming versus large and small caps. While there's a clean trend of higher lows off of the 2020 lows, mid-cap value equities are still struggling to gain momentum above the November 2024 highs. If there was an equity style that we would want to avoid at the moment, it would be mid-cap value. Closing out here, this is WTI Crude Oil. So crude oil continues to fall, currently down more than 20% in 2025. It has slipped below the important 62 to 64 pivot support level and is now threatening additional weakness below the 58 level. On continued weakness, we could see a continuation into the 43 to 45 pivot below, which is about 20% pullback from the current price level. So overall, we're seeing consistent signs of deterioration across several areas of the market, from breadth and relative strength to sector behavior and commodities. If leadership begins to roll, that could add near-term selling pressure within the financial markets. So that's going to close out here today. Thank you so much for watching this week's TA Technical Tuesday. Be sure to subscribe for more weekly research and chart analysis. And if you'd like full access to our reports, portfolios, breakout alerts, and more, you can start your free trial with TA Capital Research. You'll get full access for up to 7 days with no charge until that trial ends. But thank you so much for watching this week's episode, and we will see you next week.